In this video, we're going to have a look at Genuine Parts Company, ticker symbol GPC, as requested here. If you have any stock video requests, let me know in the comments below and I'll try and create a video for it. Established in 1928, Genuine Parts is a leading global service organisation specialising in distribution of automotive and industrial replacement parts. It distributes automotive replacement parts, accessories and services throughout North America, Europe and Australia. The stock is down 3.36% over the last 12 months. So far it's up 12.71% this year. The stock is at a 52-week high of $174.91 and low of $126.35. Over 5 years though, it's up 44%. The yield is currently 2.58%, paying $3.85 annually, with a compound annual growth rate of 5.59% over 5 years, 7.08% over 3, and 5.28% over the trailing 12 months. The payout ratio is only 40%, so plenty of room for growth. Let's have a look at the finances. It's got a market cap of $21.6 billion, ranking 875th in the world in terms of value. Since 2001, the company's value has grown significantly, which ties in nicely with their revenue growth. The trailing 12 months has seen revenue of $23.09 billion, 4.52% up since 2022. The liabilities have increased a lot, up to $13.55 billion. A company's total liabilities is the sum of all current and non-current debts and obligations. But the company's total assets easily covers any liabilities with $17.96 billion. This is the sum of all current and non-assets, such as inventories, cash and cash equivalents, properties and equipment. Genuine Parts has consistently been buying back shares, which is great if you're a shareholder. Looking at the recent presentation, highlights include revenue being up 3 years in a row. Over a 10-year period, the compound annual growth rate is 7%, and adjusted EBITDA has a CAGR of 8%. Diluted EPS of $9.33, up 12.3%, or up 11.9%. Adjusted diluted EPS in 2022. Solid cash flow, which has been resilient in economic downturns. Cash from operations of $1.4 billion. Free cash flow of $923 million. So very well positioned. It's had 68 consecutive years of dividend growth. 2024 saw annual dividends of $4 a share, a 5% increase, returning $788 million to shareholders via cash dividends and share repurchases. In terms of the 2024 outlook, the company expects revenue growth of between 3 and 5%. Let's have a look at how it's performed against the S&P. If you'd invested $10,000 10 years ago and reinvested the dividends, you would have a total return of 141%, ending with a value of $24,000. The S&P gave 230% return with $33,000. Over 20 years it's performed a lot better, beating the S&P, giving a whopping 771% return with a huge $87,000 compared to the S&P, which would have given you $67,000. Let's see what the analysts are forecasting. Tip ranks as an average buy price of $155, 0.41% up from where we are today based on 5 analysts. Market beat has a target price of $168, 8.85% upside based on 9. And Zacks have an average buy price of $155.38, which is only 0.2% upside based on 8. From the targets of Market Beat, Tip Ranks and Zacks, an average price between the three is $159.63. Then if we look at the value investing models, which work out the intrinsic value calculations, based on the discounted cash flow model, it's got a fair price of $151.37, which is 2.4% downside. And the dividend discounted model has a fair price of $120.25, which is 22.5% downside. If we take an average of the analyst expectations and the investing models, that would give us a buy price of $143.75. With 10% margin of safety, that would take it down to $129.36. The overall verdict then is Genuine Parts has strong earnings growth, and sales are expected to grow 15.9% this year. It is a dividend aristocrat and company actively buys back shares, increasing the value of its remaining shares. Plus, with optimistic guidance, it looks like GPC is a solid investment, at the right price of course. As usual, thanks for watching. If you enjoyed the video, please like and subscribe.